How does your state treat Social Security income? Oh man, I love this stuff. You know me, I love these graphs like this. Maps are always cool. I love them. So again, the Tax Foundation comes to us. Old Janelle here, Kamenga. 13 states tax Social Security benefits, a matter of significant interest to many retirees. Each of these states has its own approach to determining what share of benefits is subject to taxation. Though these provisions can be grouped together in a few broad categories, and they give us the categories: states that do not include Social Security benefits in this income tax calculation. Wow, look at that. State of Georgia, even the state of Maine, even the state of New York, Illinois, New Jersey, California, and Maryland. So I got to get out of these places. They're going to tax me. Well, they don't tax Social Security. States that give exemptions based on factors like age and income level. States that tax Social Security with modifications, and then states with no income tax. So New Hampshire has no state income tax, but they do tax capital gains and income and stuff. So in this case, they do not include Social Security in their taxation. All right. 37 states and D.C. have no income tax and do not tax Social Security. New Mexico includes all Social Security benefits in its taxable income base, so the state does provide a deduction that reduces the tax liability for retirement income. Utah taxes Social Security benefits but uses tax credits to eliminate liability for beneficiaries with less than $30,000 single or $50,000 joint. All right, so that's benefit. So it sounds like if your Social Security is less than 30 or 50, you don't get taxed. But I'm not sure. You'd have to look at that. Until this year, Utah credits mirrored the federal tax code. All right, so I guess this year they're raising it. I'm not sure if that's $30,000 of income or $30,000 of Social Security benefits if you're single and $50,000 if you're married. I don't know. Colorado, this is interesting. Colorado allows taxpayers to subtract some of their Social Security income as well as other pension and annuity income, as long as they're 55 and older under the pension and annuity subtraction. But check this out before you get too caught up in this. Basically, a pension and annuity. You're 55 years older. You have a pension and annuity. But what does not qualify as an annuity? Privately purchased annuities that not fully matured lump sum distributions. So I don't know what that means, but privately purchased annuities that have not fully matured lump sum distributions. IRA distributions, annuities, including disability pensions, exemptions, income not eligible for the pension and annuity subtraction. So I don't. Does that mean not fully mature lump sum distributions that like a variable annuity or a single premium income annuity is not exempt? I don't know the answer to that. All right, so that's interesting. You'd have to learn that in Colorado. Certain types of pension and annuity income may qualify for the subtraction under rules other than the general pension and annuity. All right, so railroad benefits, military benefits do qualify as well. So you have to be at least 55, and you're receiving a pension and an annuity. So how much do you get? Maximum, if you're at least 65 years old, you can subtract 24,000. All right. At least 55, you can subtract 20,000, and under 55, 20,000 as well. All right. So anyway, it's interesting. So you're not being subject to tax on Social Security if you're 65 years older and you have 24,000. I don't know if that's per taxpayer or per taxable. You and your wife filing jointly. I don't know how that works, but it says taxpayer, so it might be per taxpayer. That's Colorado. That's pretty interesting. Why don't you just exclude it all, man? Make it easy. Connecticut excludes Social Security benefits from income taxes if you're single with less than 75,000 and married filing jointly with less than 100,000 with AGI. So it's not provisional income; it's just traditional AGI. So if your AGI is $100,000 or less in Connecticut, you don't pay taxes on your Social Security benefit. Kansas provides exemption for benefits for any taxpayer whose AGI is 75,000. Okay. Minnesota provides a gradual system of Social Security subtractions, which kick in if the provisional income is below 81,180 for singles or 103,000 for married. So basically, if a graduated system of tax, let's click on this thing. So let's see if it tells us here. How much is the subtraction? Let's see here. The amount depends on your filing status. So if you're married filing jointly and your provisional income is less than, it's only subtraction $5,200. Wow, that's it. Wow, thanks, Minnesota. Yeah, don't freaking let the door hit you in the butt. Missouri provides an exemption as long as you're 62 and older, and your annual income is 100,000 or less for married, or 85,000 for single. So you make it simple, man. If you have less than 100,000 annual income, you get 100% Social Security exemption. Nebraska allows single filers with 43,000 in AGI or 58 if you're married to subtract their Social Security income. All right. If your income is above that, the state falls to federal treatment. North Dakota allows you to deduct 50,000 if you're single or 100,000 if you're married filing jointly to deduct taxable Social Security. Why not just not be subject to it? Rhode Island allows a modification who have reached the full retirement age as defined by the SSA and have a federal AGI of under 81,900 for single and 102 for married. Vermont provides a graduated system of exemptions which kick in if the taxpayer's income is below 34,000 single or 44,000 filing jointly. So basically, you're probably going to pay taxes on Social Security. Well, let's just see in Vermont, and we'll get rid of Colorado. Blink. We'll get rid of Social Security, Minnesota, blink, and we'll go to Vermont. All right. Did you know the IRS has a tax from blah, blah, blah? And we'll just make a quick, doesn't really say how much it is, does it? Tax deductions, exemption, and credits. All right. Let's see, tax deductions. Yeah, I'm not sure. So right here, Vermont tax exemption for Social Security benefits. You may qualify for Vermont exemption. Let's take a gander, shall we? All right. So if you're married filing jointly, it looks like it's, all right. Oh, here we go. If your AGI, if you're married filing jointly, is under 60,000, you don't pay any tax on your Social Security. If you're under 45,000, you're single, you don't pay any tax on your Social Security. Yeah, that's not so bad. Good. I'm surprised. I thought Vermont would be a lot more evil about that. Okay. And West Virginia passed a law that in 2022, the benefits Social Security will be completely exempt from taxes. That's what I'm talking about, baby. And Montana got to fill out some worksheet. Anytime I hear a worksheet, I just want to cringe. But anyway, so notice again, some of these, how does your state compare? Ooh, I love these kind of maps. So there won't be any tax there. No tax in New Hampshire. Decent exemptions in Vermont. What did we say about Massachusetts? They didn't have anything about Massachusetts, did they? Didn't say anything about Mass. Huh. That's weird. Well, they got tax right there, Social Security. Huh. Why they got state gives exemptions based on factors like age, but they right there, they got blue. Huh, that's weird. So I'm not sure. They say Massachusetts doesn't tax you, and then they should have had that as a dark. Well, that's Massachusetts. That's Connecticut. Excuse me. Never mind. Scratch that. All right. Well, good stuff, man. So, I mean, so essentially, in a lot of these states, if you're living on, $100,000 of income, you're not paying any tax on Social Security at all if you're married filing jointly. And I mean, have you been living on $100,000 of income up to this point? If you haven't, then you're probably going to be just fine. You don't need to flee these states from an income tax perspective. It's always the federal government. Good stuff. So I'll put a link in the show notes. Love to hear your thoughts. All right, we'll see you.